Hi traders and welcome to the Friday market wrap on the 29th of July. So we've seen the close of another week that's been very strong on an earnings front. The earnings out of the US have been very good, or at least in line, and the markets have been really reactive. We've also seen an interest rate decision that stayed pretty much as expected, so that really helped bolster the market as well. So there was no unexpected surprises there. We'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. As always, the favourite amongst the Aussie traders, and look, it's behaved itself in a very nice way this week. It's certainly walked up to the 70-cent mark pretty comfortably. From a technical standpoint, it's been very good, really. Like we've been, look, on a daily, you can see that obviously filled the channel that we were waiting, it hit our target. But if you go to the smaller time frames, I think you can see the ebbs and flows were very easy to trade. We'll just zoom this right out, and you can see we've had the series of higher highs and higher lows. And then basically, I'll go take it out just a little bit further. As you can see, all the reactions off the 20 and the 50 moving average were pretty solid. You're able to scalp pretty much just all the way up to the 70 cent. And realistically, look, if you were going to even the smaller time frames, if you were actually trading the really small ones, you were still going to get reasonable trades here. You can see here that the ebbs and flows were pretty good, mainly through here. I'll just take it back a day or so because the last day has been a little bit flat. But as you can see, the movements off the 20 moving average were very strong. We had lightning bolts pretty much all the way, and even if you were scalping the middle of the channel to the top, or from the top to the bottom, you had some pretty good trading. I think that the Aussie has it's been fairly straightforward in the sense that we're really waiting for an interest rate decision as well, right? So we're going to have our interest rate decision next week to see what actually transpires. It'll be an interesting one for sure, but I think from a trading standpoint, this has done exactly what we needed it to do. And you can see that, we've hit the 70-cent mark now. I'll take this right back to the front. We've hit the 70-cent mark, and realistically now where it goes to is going to be really dependent on what happens next week. I think I could probably see it hovering in between this little zone here. I don't think it's going to be really selling off anytime soon. The 4 hour, again, just like every other time frame, has behaved itself quite nicely, and you were able to get in on nearly all of these trades off the 20 moving average. So pretty good trading, really. But again, from this point onwards, I think that we would realistically stay at this level or close to it until Tuesday, when we see what our Reserve Bank's going to do with the interest rate. And that is going to have a pretty reasonable effect on the Aussie, I would think. If it's in line, then maybe we're going to see a little bit of an uptick and break above the 70-cent mark. But of course, a surprise result would see us sell off reasonably well, probably down to the 68-cent mark again. I would think that this channel is probably going to hold up on the downside. So even a bad result for the Aussie USD would probably see the 68.50 hold up. So I would think that's probably the range that we're going to be staying in. So I think the fun's been had on the Aussie now. I think what we need to do is, if you really want to trade it now, we have to basically look for shorting opportunities off the 70-cent mark. But I think that I wouldn't be aiming for anything probably lower than the middle of the channel here, mainly because I think it's going to probably steady up. I mean, we'll get a little bit of an indication of what the dollar index is doing in a minute, but in reality, this is where it's going to find resistance if it's going to, especially when it's anticipating news that's not very far away. So I would see a fairly flat market, probably not the ideal scalping or trading market now for the next 48 hours or 48 trading hours, that is, until Tuesday. So we'll see how this one goes. But it's hit our target, so we should be, hopefully you were able to take advantage of that. All right, we'll move over to the US dollar CAD. This one has effectively done pretty much what we expected it to do as well, really. Like, this is the daily chart. As you can see, we've had weakening off the 20 moving average, which is no real surprise. We broke the 20 moving average, tested it from below, and then it has sold off ever since. It's the 128's it's a fairly strong level, this level. Like, we're trading in the middle of one bigger channel, but there is a median channel here that this is sort of holding up. It did hold up to a certain extent. It sold off a little bit below it now. And if it is going to continue on, the logical target's going to be that 126.50 area, which is the bottom of this channel. Now, what it does from here, I think, is going to be very important, because if we see a bit of strength and we get a close above this 128.50 level and above the 50 moving average, I could see it tracking back up to around that 130. I think these two channels are going to hold, and whichever way it plays out, I think you're going to get some reasonable trades. It's certainly not a place where you can set and forget a long trade on it and not worry about it. I don't think it's in that environment right now, but it's certainly a good scalping environment, because I think that the moves are reasonable enough where you can get a pretty good scalp in. I mean, you're talking about 100, 150 pips once it gets through. in either direction. So I think you're pretty set no matter which way it goes. And I'm not overly concerned. I think I'd be happy to trade both. Look, probably the move and momentum is on the downside, really. Like we've seen a moving average crossover on the histogram here, so we can see we're below the 0 again. So that tells us that the 12 is below the 26 and starting to separate. So realistically, if it doesn't hold up here and does continue to sell off, then that's not such a bad thing, because we're going to be able to get some reasonable trades into the short anyway with the momentum flow. But of course, if we get a close up here above on the daily chart, we can start aiming towards the top of the channel again. So yeah, pretty good scalping opportunities on the CAD, but nothing too long term, I wouldn't have thought. All right, the US dollar yen, this has been, I think, pretty good from a trading standpoint, actually. Now that we've seen the legitimate lightning bolt on the way down, I think the top has probably been seen in the most recent trading action. I don't know if we're going to be going up from here. When you look at it from this perspective, you can see a pretty big sell-off. It's landed right on the 50 moving average, but yeah, in reality, it's come down effectively nearly 500 pips actually. So it doesn't look like a lot, but it's actually quite a lot. The momentum has definitely shifted now. We're about to go into negative territory on the MACD. As you can see here, signal line is well and truly out, and has been out, realistically since it effectively started to fall. So this whole last fall, the signal line out of the histogram has really given us that clue that that's probably going to be the weakening factor here. Whether the 50 holds up or not is going to be the $1 million question. If it does, I think it's still going to find a lot of resistance around here at the 136 now, and that's going to be a problem for it. The 20 moving average in the 136 is going to provide a reasonable amount of resistance. It would be a really big move to actually break that now, especially in one hit. So I would actually anticipate that we're probably going to see a little bit more strength around this level here, maybe push up to this level, and then probably sell off and break this level down. Now, if this level breaks down, this here at 131 is pretty much the next target. You could probably stretch it out to 131.50 is probably the roll reversal zone, because that's the exact zone. I might actually put a line there so we can keep an eye on this level. So the 131.50 is the level we're talking about, and pop that there. Okay, so this is the marker that I think we're going to be aiming for if we get a break of the 50 moving average. Now, it doesn't mean that we're going to do it in one hit. I would probably anticipate that we're going to see maybe a little bit of strength around this level here. You might go to a smaller time frame, see if you can get a lightning bolt on the upside on a smaller time frame. You might get a pullback up to the 20 moving average, or probably at its highest, maybe 136 sort of 60 area here. This is what I would probably expect it to do. But if it doesn't do that and continues to fall, our target's going to be the 131.50 area. It's just a little bit lower than that. I'll just bring it down a little bit. That's the marker that we're going for, because it's a roll reversal zone. Okay, so you can see that we're resistance over here, we have support over here. So that's going to be our next point of call, and we're going to find some form of support there, and that would be a very logical target. It should gravitate to that level. So pretty good trading on it though. I mean, if you go to the smaller time frames, it was definitely playing the game on the 1 hour. You can see, zoom it out. Okay, so you can see we've got the lightning bolts all the way down, so no real surprise. That was pretty easy trading. The lightning bolts we always talk about play the game very well, even right through here. You can see touches of the 20 moving average. So when you're scalping and you're using those little mini pullbacks in the direction of a very small mini prevailing trend, it does make trading very straightforward. So hopefully you're able to take part in that. All right, we'll go over to the dollar index now. Dollar index is, let me go to the daily, and we'll have a quick look at this one. All right, so as you can see, it's found the 20 moving average a bit of a challenge to get over. It's broken down below it, but it's not exactly very convincing just yet. We know that we've got a bit of a target here at 105. If we continue to see the sell-off, a little bit more weakness will probably get us to this level. That will nearly coincide with the 50 moving average. If it takes a few more days, the 50 will probably catch up to that level, and it will be a pretty reasonable sounding board for it to actually bounce off. Now, MACD weakness is certainly starting to kick in. The signal line's out of the MACD. I mean, sometimes the signal line can be underrated as to how important it actually is, but you can see nearly every single time when it does come out of a big, tall movement on the histogram, it does signal the start of the sell-off, and you can certainly get that part and that portion of it. Obviously, the one we're really concentrating on here is the euro, so we'll go to that in a second. But as you can see, we are trading below the 20 moving average now, but we do have support not very far away, so we've got to be very mindful of that when we look at the euro. Okay, so Euro USD, obviously, in the opposite direction. Notice that this one's not trading above the 20 moving average as convincingly as the dollar index does, and that does concern me a little bit. We know that we've got pressure in front of the euro. the MACD is indicating that it's going to potentially push up, but it's not doing it with any form of divergence or anything, right? Like, so we've got a trough, and we've got a trough, and we've got a higher trough, and we've got a higher trough on the MACD too. So there's no divergence here. So I am just a little bit cautious that, although we are seeing a move up, we are also, only just trading above the 20 moving average. For me, we need a daily close above the 102.50. If we get a close above here on a daily chart, then we're going to have the lightning bolt on the daily, and I think I'll be a little bit more convinced that there's enough strength in this market to push up to the next logical level of 104. Now, failing that, if we do close below the 20 moving average again, then we're going to be starting to target the very high 99s and parity again. So I think it's good trading either way on the euro, and I'm not won over as to which direction it's going to go over. I'm not really fussed either, to be honest. I'd be happy to trade it in either direction, but it needs to do one of those two things for me. I think it's been a little bit flat and difficult to trade this week. No lies there. It hasn't really moved a hell of a lot. So you've had very, very little movement, but sometimes that is the start of a reasonable move if we do get that close in the key area. So close above here, we're aiming for 104. That's a 102.80 there, and a close below the 101, and we're starting to aim for parity again. So very straightforward trading on the euro. All right, the last one we'll have a look at is the S&P 500, the all-important index. Now, look, we've seen a very, very good move. This has behaved itself absolutely beautifully. No question about that. Lightning bolts all the way up. We know the target's the 4150, fast approaching that. It's had news to help it, no question. It's had reasonable earnings to help it. But at the end of the day, the technicals were indicating this was what was going to happen. So, when all that joins together, it makes for a beautiful, beautiful thing. As you can see, we had a double bottom here in the direction of the mini trend. It came back, broke the neckline, came back and tested it from the bottom with a 50 moving average as a bolster on the support. That always adds to the pattern and makes that level what we call a conservative entry. That's a conservative double bottom entry where you actually trade the pullback to the neckline rather than the break of the neckline. It did it basically to the point, touched the 50 moving average, and then off it went. And off it went. It's effectively finished the pattern anyway. I mean, the pattern for double bottom is basically from this level to the neckline. As you can see, it's well and truly done that, even though it's got a little bit more to go before it gets to the absolute resistance at 4150, sorry. That's the level, 4150 to 42. It's really a zone. That's the zone that we're actually aiming for. And I think it's still got a little bit to go before it stops. So even though it's doing all the right things, you can see the 50 and the 20 moving average are about to cross. Hasn't happened in quite some time. As you can see, the last time it happened, the price was actually at the level that we're aiming for. So it wouldn't be a bad level to cross. You can see the 20 is all but about to cross the 50. A couple more days of strength or even a couple of days of just no selling really. And this will cross no doubt. And then we'll push on more than likely to the 4150 and 4200 probably at the highs. At that level, I'd be starting to consider where our next move is going to be. I'd probably let it consolidate there. I'm not so sure it's going to go flying into the 4600s again. I'm not so sure that's going to be the case. I think we need to just wait and see on that one and let it play out and see if the resistance is strong enough to actually send it right back down again. If we see a weakening of this level, I mean, anywhere in this level now, anywhere between 41 and 4200, if we see a rollover on a 4-hour, say a series of lower highs and lower lows on a 4-hour chart, I would be thinking that maybe that little mini move is over, and I'd be starting to target the moving averages again. We're away from the moving averages now. So in the first instance, I'd expect it to pull back to the moving averages and to a bigger degree back down to this level here, which is around the 3900. So reasonable trading, not massive points, but certainly enough to get scalps in and a few little mini swing trades. So it's been pretty good trading on this one. Hopefully you were able to take advantage of what we were seeing last week, which is a start of a mini momentum move up. So I hope everyone's had a good week's trading. I think we've seen some good technicals play out. So hopefully you're able to take advantage of some of those. We'll monitor these levels very, very closely, and we'll see the tail end of the earnings season start to play out in the next little bit, and then we'll get some real direction just before the Aussie markets earnings starts, which is in the next couple of weeks. Thanks everyone, and have a great weekend.